Hey traders, this is the Crypto Cowboy. Welcome to Elliott Wave Cafe. And in today's YouTube video, I want to talk about this kind of business of trading. And I want you to take a look at Ethereum dollar and one of the trades that I've developed. I've initiated in the Ethereum, and I want to walk you through kind of my thought process and also what I see in this market and kind of how I look at the trade from a business perspective. I think this is a very kind of under utilize and underlook thing. When we trade, we kind of tend to forget. Sometimes our emotions take place, and we tend to forget. We want to be right, so we tend to forget to look at at every single trade that we take as a business transaction. And basically, that's all it is, right? You wanted to, put some money to work and have some small losses if it happens to have them, and have some large gains, if it happens to get them. And this is pretty much all it is. It's all a matter of minimizing losses and expanding your gains. But you always have to remind yourself that every single trade that you take is nothing else than a simple business transaction. In any business out in the world, that you look at, the main goal of that particular business is to make money, right? And to pay its employees, and to pay its vendors, and to keep the clients satisfied, and the consumers and the customers. So if I'm looking at the trade, I need to look at it through the same kind of eyes, and just make sure that if I get into something and if I risk my money, I want to make sure that I do it in such a way that it's profitable for me, and it puts me on the best position possible to get those gains. So I want to walk you a little bit through this Ethereum trade and kind of my thought process on this, and explain what I see from this and what I want from this, and also what I don't want, and what am I going to do if the trade doesn't work out. So, I kind of started looking at Ethereum dollar. We always monitor it every single day, right? You're watching your accounts, and you're watching the markets, and then, you're along the way somewhere, maybe a setup comes along where you say, well, I think I can make something happen here. I can make a transaction here. I think I can make a business transaction and try to, make some money so I can pay myself, or I can pay whoever works for me, right? So, I've been waiting for Ethereum dollars for a long time to see if this second wave that I have on here, and I'm not going to talk a lot about the Elliott wave part of it, but I was waiting to see if we're going to get a second wave pullback that's going to be a little bit longer than what we've gotten up into these levels. And as I was kind of waiting for this thing to develop, and as the market was kind of moving sideways, I kept my eye on it, and I said, well, why is this market not correcting? Why don't we get a second wave pullback that's a little bit larger than just the small drop that I have on here, right? So I go back on a daily chart, and I look at this whole move from the lows in March, all the way up here, towards the end of the year. And, if I'm considering this to be a wave one, I would like to have a second wave here that's, quite proportionate with this wave one advance, and I'm not, we didn't get that, and that was kind of a little bit frustrating, because it puts you in a position where the market is not doing what you think it's supposed to be doing based on your analysis and based on a right look under the Elliott wave guidelines. So that kind of sends you into a state of I should say, maybe unclarity, right? And it's just it doesn't give you a whole lot of confidence that the market is responding to your thought process. So it's just like in a business transaction, you're going in with thinking that something is going to happen, and you're expecting certain things either from your customers or for your consumers, and from your clients, whoever you do business with. And those expectations don't come true. Either somebody doesn't respond to your email, or it doesn't give you a down payment for something that you're supposed to do, or whatever it is, things don't shape up the way you want them to shape. So then you're stepping back, and you try to come up with the next possible alternative and say, well, how can I push this transaction through? How can I come up, what's going on here, why this doesn't happen? So I'm looking at the second wave, and I give it plenty of time for it to develop and to prove me that it was going to be a second wave, and that move did not happen. So what the market did instead it started to climb higher here. And it climbed into a 1 here. You can see that you have a move from these lows. So I counted this as an ABC simple for a second wave pullback. And I'm like, all right, well, if we haven't sold off, that means that this wave 2 is very likely done. And, you know, based on this count, I'm expecting a move to new highs. And, you know, then I noticed that, and I kept giving it a chance, but the longer this thing kind of traveled, the more, you know, I started to be discouraged on an existence of a second wave pullback. So then I started to look at the other way, and I said, well, if this second wave is not completing the way I'd like it to, that means that something else is going on, and I got to look to the upside. That means that that's done, and we're gonna advance higher. So, you know, then I modified the count, and I'm looking at this thing and say, well, this could be very simple, a leading diagonal in a wave 1, wave 2, wave 3, wave 4, and wave 5. I complete a 5-wave sequence in here that's overlapping, so it's got to be a leading. I'm looking at the internal counts. I'm checking to make sure I'm not breaking any rules in here. And then, you know, I'm waiting for the second wave pullback. So as I'm waiting for this second wave pullback, and sorry, I just got a little distracted there. I had to say hi to somebody. So as I'm pulling on a second wave pullback in here, I'm thinking, well, this could be a pretty nice entry for a longer advance and for a longer trade, right? If this is a 5-wave sequence higher here in a wave 1, and I'm getting a second wave pullback, that means that this is a pretty good setup for a larger third wave advance. So now, you know, as the market kind of comes back in here, I'm not yet fully convinced that that is, you know, that's the whole setup. So I wanted to see a little bit more from the market, and I'm waiting. So, and I'm waiting for a break of these highs here, right? So that's a wave 1 top. That's a second wave pullback, and I'm waiting for the break of this to initiate my trade. Now, there's a couple of things here that can happen. You can initiate your trade if you're spotting this leading diagonal and you think that that's what it is, and you're getting this kind of pullback in here, right? Just a simple ABC pullback, and you want to get into this trade, it's totally fine, right? It's a business transaction, and you're thinking, well, you know, this is a pretty good pullback, that's a leading, and I can initiate some longs in here. The stops for a transaction of this magnitude would have to be back below this wave 1, right? Because the moment the market would drop below this and would start to break below this level, your whole premise, your whole transaction here would be wrong. You assumed something and it didn't happen. The market came below that, and you got to get out of your trade and contain your losses, right? So, you know, it's similarly with any other business transaction that you do. You know, things don't pan out the same, you know, the way you think they would. Maybe, you know, you're writing a book and, you know, you ordered too many copies and you don't have enough, you know, customers to sell it to or whatever. And, you know, you're just going to have to, you know, either sit on a big inventory or I don't know, burn some of those books or whatever you're going to end up doing. Maybe it's not the best example, but, you know, you understand what I'm saying. So, so what's happening here now is that if you've taken that trade from these levels, fine, you know where your stop is and you know exactly what you're looking for. That's not what I did. I waited to see if we were going to break above this wave 1 high. And for me, that was a trigger that the market, it's actually buying this market, right? Because the moment you're just kind of buying in here, you're still buying in a little bit of a downtrend. Now I got my confirmation that the market is moving higher, and I initiated a long position on the breakout of this wave 1, looking for this larger third wave advance. So this is my trade plan. This is what I'm thinking in terms of a transaction, right? And now I know exactly where I'm going to be wrong based on this count. And what I don't want to see is I don't want to see the market breaking below my entry, below the wave 1 low, which is right down here. And that's at about 370. So I've initiated a long position at 426, and I've placed my stops below 370. Maybe 369, 370, doesn't matter. But I know that if this market breaks and turns and breaks below this, that means that this is not a wave 1, there is something else happening in here. Maybe it's a C wave and we're doing an A, B, C, we're breaking lower and we're about to make new lows, right? So that's where I'm looking at it in terms of of a simple business transaction. I know exactly how much I'm willing to risk and what am I going to be wrong in this transaction. And I'm not going to have any emotion about it, right? I know exactly that my premise for this trade was wrong. I'm going to pay the piper here and say, fine, this didn't work out. It didn't happen how I thought it was going to happen. And, I got to look at the next setup. Now, to me, this is a, pretty good high probability setup. That doesn't mean it's going to work, but I know exactly what I'm doing. So now what's happening from here? Now, the market, I'm going to go to, a smaller time frame in here. At the moment the market broke above this 426, something interesting happened, right? You made new highs, and now, you're kind of getting excited. Say, well, you see, I was right. The market is making new highs, and, this is pretty cool. Now, remember, my hold stop was about this much right here, right? So whatever risk you're assigning into this stop, if it's a 1%, if it's a 3%, if it's a 5%, hopefully it's not a 10%, because I don't want you risking anywhere near that much for any particular trade. But your gain so far, it's only about this much, right? So maybe it's about half of what you risked. So that's not a whole lot, right? And you're thinking, well, if I risk this much, why should I close out the trade based on, a little bit of a gain in there, right? I want this transaction, since I risked so much for it, I want it to actually make me, way more money than what I risk. Because next time, if I get stopped out, then I'm going to take profits, half of what I've risked. It's not a really good transaction, right? In terms of business, it's kind of stupid. You don't want it to, run your business that way, where you risk, $20 to make $10. You want to risk your $20 to make at least 20, or, maybe 30, or maybe 40, or maybe 100. So I'm not happy with that profit. So what I do, as the market moves, and we're making these new highs, now I'm trying to minimize my risk, right? And because I'm confident that my count starts to work, I take this move from 370 and I move my stops higher with $20 and I go at 390. And the reason I do that, and the moment I did that was the moment we start to sell off in here. When I start to see a little bit of a sell-off in here, I wanted to minimize my risk. And, now instead of risking whatever we've had before, $30, $56, now I'm risking only 10 plus 26, about $36, right? So now I look much better. I'm more confident. I have more, less capital at risk. So this is great. This is in my favor. As a business transaction, this is in my favor. I've done a smart thing here by raising the stops. Now, I don't want to raise the stops too much, because then I don't want to do a stupid business decision where I'm going to get stopped out into the market and not giving this trade the necessary room to run. So based on that, I need to know what am I going to choose for stops. And that's going to be a level where if the market comes to, my trade starts to be in big trouble. All right. And what I've decided here is that this is going to be, it's a nice impulsive lag. And I've noticed the swing here, right, which is a 1-2. Possible this is another 1-2. Maybe that's a 3. And we're doing a 4 triangle and a move up higher here in 5. Possible. But this was a decision kind of made on FIPS, right? I wanted to, because this is an impulsive lag, and it's supposed to be just a larger third wave advance, I want this market to be as aggressive as possible. And now, if I'm pulling from the tops, a second wave pullback, let's say that this wave 1 is done, I'm looking for a pullback here on price not to exceed 61%. So that is at about 405, right? So I really don't want the market to get below this 405. But since it's a crypto market and, you can get swings, the next level that I'm looking at is this 78.6, right? And that 78.6, it's at 389. Now, my stops here is at 390. Now, depending on your platform where you are, and if you're trading on Kraken or Coinbase or wherever, right? Some of these levels might be a little bit different. But I wanted to make sure that you're kind of coming with that stop just below that 78.6 point, or right at it if you want. Because if the market starts to come at 78.6, I think the trade could be in a pretty big danger that you're actually going to move lower and break through. Right now, if the market comes here and stops you out and then reverses, right, then you have to start to think about this trade again and see what's the next wave count that's possible for a bullish move. And maybe this was an A, that was a B, and then this was a C, and maybe it turns into a flat. And you're trying to study the market again and enter maybe again on a wave 1 or a wave 2, but that's a totally different trade. That's a different business transaction than the one that you've initiated here. So it doesn't matter that you get stopped out and you pay the piper a little bit. You're going to look at it and say, well, is this direction still valid? Is this something that I can still work with, or something completely changed into the market structure and I need to be looking down instead of looking up? So I've decided to move my stops and reduce my risk and come up here to at about 390. Now, based on this, what's going to happen now? What am I looking at from this market going forward, right? I'm still in profit, not by much. This is 426. The market is at about 452. So I got about $25 of profit. And I have no I have no reason to get out of this trade. There's nothing here that tells me that we're about to fully reverse. If anything, I'm just kind of moving sideways. So the thing that I see on here, it's a simple triangle that kind of develops like that, right? And this is kind of what I'm looking, and I don't want to get excited about the moves either way. I'm just trying to be as analytical as possible by looking at the price action. So if this is a wave 1 and I'm looking for a second wave, I got two possibilities here. And just kind of going back, either this wave 1 is not done. This is a triangle and we're pushing up higher here in one more high. And that's going to be 1, 2, 3, 4, and 5. And then this wave 1 moves up here. And then I'm going to get a second wave pullback. Now, the moment I make a new high in here, automatically these fib levels are going to get higher, which is in my advantage. Because then I'm going to be able to take the stop loss and push it a little bit higher. And I reduce my risk from 426 and from 390 maybe to about 400 or 410. So now I risk even less on if the market comes back in a three-wave pullback into the new fib zone, which is higher. So every single little advance that the market makes here, it's in my advantage because it allows me to move my stop, reduce my risk, and tied up my position. And from a business perspective, I like that, right? I like that. I wanted to let the market move higher, but I'm minimizing risk and my account looks much better and I'm much more relaxed. Now, what happens if this is not a fourth wave and instead it's a second wave? Let's say that this wave 1 is done and now you're looking for a second wave. Now, because it's a triangle, the way it looks, if it's a triangle, it cannot be a second wave. If you know your Elliott wave rules and guidelines, you know that a second wave cannot be the entirety of a second wave. A triangle cannot be the entirety of a second wave. It can be a portion of it, but not the entire second wave. So when I mean, and I say a portion, that means that wave A is this wave down, or a wave W. This wave here, it's either a B or an X, and then we still have to come down here in a C or a Y to complete a three-wave decline following a five-wave advancement in a wave 1. And now these fib zones here are supposed to protect me. If my thought process and my count is correct, these fib levels here are supposed to protect me and allow the market to come back here, but not below these levels, and then bounce from here and start moving higher. If this doesn't happen and the market moves lower, that means my premise is wrong. Something else is in the market, and again, I have to pay the price for that. And it's a simple transaction that I do between me and the market. And the more you focus on how much you risk, and you let this market continue to move higher in the larger third wave, because the market, the market is going to do what it's going to do. The only thing you can control, you cannot control how high it's going to go or even if it will go. But what you can control is you can control where these things are, these stop losses, right? And based on your count interpretation, you got to know, where to place them and how to adjust them to make sure that you're always kind of protected and you're not running a bad business. Okay, so now what happens here? If the market moves higher here, and let's say that, let's give it this scenario, that we're getting an A, we're getting a B, we're getting a C, and now I'm starting to see that the market moves higher here, right? And you're starting to get above this wave. Okay, the moment this happens, now I have a high degree of confidence that a wave too low was found. Okay, now I always know that this could be also a flat, right? This could be a 3, you can go up here in a B, and you can sell lower in a C, and you can get a flat in a second wave. But in terms of a right look, depending on how big this gets, makes you make that decision. For right now, we don't know that. So what we're going to do, if the market does this, and then it breaks higher above this level, what I want to do is I want to take my stop from 390 and move it above this wave too low. Because if this is indeed a wave too low and we found it, that means that that's a 1, that's a 2, that's never going to come all the way back there. Okay, and you're going to do a 3, a 4, and a 5, and you're going to get all the way up there. Okay, so now I'm risking a much smaller position, and I'm almost going to be able to get this to a break-even trade, and I let this market continue to develop. All right, now the moment that this market moves up higher here, I see that it's actually a 5-wave advance into this 3rd wave. Now the next move that's going to come down is going to be a 4th wave. Okay, now this 4th wave, we know from the Elliott wave rules and guidelines that it cannot come into the area of a wave 1, which is right here. So now I can take my stop from where I had it, or from the break even, and move it slightly higher, right below this wave 1 top. Because I know, based on rules and the guidelines, if this 4th wave moves down, that means that the market, that I'm wrong, and something else is going on into the market. So another thing that can happen, the moment you're basically moving up higher here and you're starting to get maybe, equality between what you risked originally and the profits that you already have, you can start to think about taking profits maybe at about 100% your risk, okay, and start to take maybe 25% of the entire trade off the table up into those levels. So you're going to take some off. You're going to have your stops at break even or even higher than break even. You're going to lock in some gains. And now you're thinking about it as a business transaction. You take profits along the way, you're minimizing risk, and you're constantly monitoring the wave count to make sure that continues to act the way you think it's going to act and the way you projected it that it's going to act. All right, so there's no emotion, there is no drama in this, in what I'm explaining to you here. It's you follow the market. And the market is going to frustrate you a lot of times. And a lot of times patterns are not going to work the way that you want them to work. And you're going to notice that maybe, this thing, goes higher and it does maybe a very simple, let me just kind of go back. It does a very simple, let's say this is an A, that's a B, and then somehow you get up higher here in a C, and then you completely reverse lower. All right? And there's nothing you can do. There's nothing you can do. You're just going to have to adjust your count and say maybe this was a 3, that's a 3, and it's actually a big, large flat, and you still haven't finished your second wave, and the second wave finishes down here somewhere. All right? But then you're going to notice that, and you're not going to be frustrated because you know exactly what the next count is, and you're going to go at it again and, look at the count. And remember, the sell-off, if it happens, it's going to take time, and it's going to happen in 5 waves, and you might even be able to short this market to the downside if you know the rules and the guidelines in the Elliott wave principle. So, once again, maybe I haven't given you my best examples on the business transactions, but you have to look at it as such. You minimize your risk and you maximize your profits. You're constantly watching over your business. Whatever your business is, you have to monitor it. Every single morning you wake up, you're talking to your team, you're making phone calls, you're making sure you're making money, that you're not losing money. If somebody is inefficient, you're going to fire him, you're going to hire competent people, you're going to watch your accounts, you're going to watch your debt, you're going to watch everything that it's connected to that business to make sure it's profitable for you. Okay, because if it's not and you're running negative, you're going to bankrupt yourself, and that's how you lose accounts in trading as well. So there is nobody to blame by yourself when you don't run your business, your trading as a business. And you learn that by having a very good methodology. Mine is Elliott Wave. Then you run that through emotion control, and then you got to have the necessary steps in place, to have exits and to have really good entries. And, this way you're going to get in a place where you're going to be profitable. So again, thank you guys for watching. Hit the thumbs up if you like it. Subscribe to the channel. Come and visit us into the Pro Trading Room. This is how I approach all my trades, how I talk to my clients and my subscribers every single day about what we're doing. And, that's kind of how we run the room. And it's not just Ethereum. We look at a lot of other markets, from oil, commodities, the S&P 500, Bitcoin, it's a big one. And, some stocks sometimes, if it makes sense. But, that's what we do. So thanks again for watching, and I'll see you on the next one. Bye-bye.